Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, July 26, 2019. As always, please hit the like button and subscribe to this channel. This channel exists because of your support. Thank you for the support. Once again, stocks hit new record highs. SPY QQQ will look at those. I'll show some pullback trade examples. We did not trade StarBucks, we did trade Google. Also, I'll show a breakout trade example for travelers. I personally did not trade it, but the principle is very similar. And I'll show you how easy it is to trade. So far, junk debt is in agreement with stocks, so not much we can worry about, because stocks and junk bonds correlate very highly to one another. We're waiting for the rate cut from Federal Reserve. I think it would improve the yield curve look. I'm not going to cover too many commodities in this video, mainly because natural gas is really not doing anything interesting. We have a trade in oil and copper, so I will cover gold, euro, pound, gold, dollar index, and we will also cover some interesting candlestick patterns when a bullish looking candle doesn't actually mean a bullish outcome. And we'll finish off with crypto review as usual. So don't forget to sign up if you are ready to sign up. Alright, let's look at S&P 500. S&P 500 ETF SPY, the good old ETF that you can trade. It is now at record highs. Today it closed at record highs, so there is really not much you can say about this chart. It's a bullish chart. We only want to be buying it. Where do we want to be buying it? So here's a good opportunity that occurred in early June, and it's a no-brainer, right? Like if you look at this chart, you will just like, oh, it just jumps out at you right there. The price dipped below the blue line. Again, you can find out more about these indicators. Throughout the presentation, I'll be using my own indicators. And you can have the same indicators on your chart. So the price dipped below the blue line. That's it. This is where we're buying. We're buying on close above. And this was an actual alert. Same thing that was sent to my subscribers. Today it is a record, yet another record high for QQQ, the Nasdaq 100 ETF. Dow Jones very close to records, just kind of trading sideways. You know, normal, nothing to worry about. This is not really a divergence to speak of. So overall, stocks are doing just beautifully. And again, you can see a pretty much no-brainer, straightforward trade. I'm not making this up. These indicators are drawn in real time, so you can. Let's go back, for example, and you can see that, let's just say that here in 23rd of May 2019, I don't know what's going to happen in the future, but I can see the indicators, so I'm going to advance one day at a time. There's that touch of the blue line, you can see right there on the 29th of May, and this is when I sent the alert to my subscribers. We waited a little bit because our stop is significantly lower. Stop is at the yellow line, and there's more than a target, and it just keeps going and going. So overall, a very easy way to trade. You really don't need to think too much. Here I wanted to show some very popular stocks. Here's StarBucks at record highs today, closing at record highs after a big jump. I think there was some earnings and all that. Overall, nothing is different for high volatility stocks versus low volatility stocks. Stocks more or less behave the same. So if you can just notice those patterns of behavior, you can make a lot of money in the stock markets. You just need to notice those patterns. So here what I want to do is I want to backtrack a little bit. I want to show those same patterns. Now, we were not trading StarBucks at MasterCharts Trading, so I'm not going to claim, this huge gain. But let's just backtrack a little bit and see if we could find a good spot to enter. And for example, let's just say that, you know, we're back in the December 2018 and we're seeing this pullback from November 2018 towards the blue line. Look how nicely it just landed right there. This is all I need to know. Did it come back to the blue line? If yes, and did it close above it? Yes, then we enter. So here's one opportunity on 26th of December. And then there were several more opportunities a few weeks before that. Now, this 21st of September and 8th of October 2018 opportunities were what I would consider a breakout, because you can see before that the stock was trading well below even the yellow line. So this is basically 52-way close. And then we can see a move up and a breakout above the blue. At this point we can just start buying. Another opportunity is after the breakout we see a pullback. So there's the opportunity in December of 2018. And this is all we basically would do, is we just sit there and do nothing. And you can simply advance the stop, and you can see that, let's say you entered back in October of 2018 and you just did absolutely nothing, which is probably the best thing to do in the stock market, you will have a 73% gain on your books. So again, very easy to conceptualize trading. There is no mumbo jumbo, there is no volume. Notice I don't use volume at all. There is no need for it. It's pretty straightforward. Alright, let's look at another recent example, and that is of Google, also known as Alphabet. Now, this is also an actual alert, and so we were trading it at MasterCharts Trading. So we see two alerts here from 3rd of May and another one from 15th of May. An initial breakout occurred right there on 11th of May. I'm going to mark it in the chart. Right there. There's the close above the blue. Initial breakout. You can just buy it right there. Sometimes we just do it. And I like to buy it on breakout actually. Sometimes it just goes. Now, it was under pressure throughout the summer. In fact, here in early June, I sent an alert to my subscribers to avoid. I would exit. I would just cut my losses if it closed below the yellow line. Notice it actually did not close below it. It bottomed around it. And this is another reason why I like this, my indicators, is because it really shows price action quite well. So you can visualize price action. There it is. You can see that there was no close below the yellow, and this was just a warning. So if you simply again did nothing, which is again one of the best things to do in the stock market, you just sit there in the position and do nothing. And then finally today we have a nice move higher, and I think it might continue significantly higher. I mean, this is a just tremendous gap here from yesterday, from 25th of July. It gapped almost 8% and continued higher. And for, it's a sizable gap basically. So overall, same thing. There is the alerts. Yes, you had to sit through this. Yes, you have to have nerves, and nobody is denying that you have to have nerves in the stock market. In fact, I would strongly advise against doing, trading if you are easily wounded by things like losses. And this could have been a loss, but also you can make large amounts of money if you just follow the instructions. And sometimes you just have to sit through this kind of nasty looking pattern and just sit and wait, and then you will be rewarded. Another example I wanted to show is from Travelers Insurance. Excuse me. Again, I did not trade this chart, but I wanted to highlight this interesting pattern. So, Travelers Insurance bottomed out in December of 2018 here, 24th, 26th of December, where I'm hovering. And then we had a nice big run higher. And then you can see right there on 25th of February and 8th of March of this year, I have two arrows up here. I did not send those actual alerts, but if I was trading this particular security, I would be buying it here. I would be opening a long position. And you can see that at the point of me when I would be opening the position, the stock has already moved almost 18%. So sometimes I get, people asking me this question is, well, aren't you missing half the move? And I say, yes, but notice that before that we were actually making lower lows and we were bouncing off this red line. So this red line is kind of like a level where I would be comfortable opening a short position. But here above the blue, this is where we will be comfortable opening long positions, because we now know that the trend has changed. So yeah, it has moved 17%, but then if we fast forward, you can see that it has moved another 18%. You can see from the about 130 here, where the position would have been open, to top here. That's another 18% move, and it is set to continue because this is a bullish security. So once again, we will be basically we're basically looking for these types of patterns. Yeah, it has moved quite a bit already when we were supposed to be opening the position, but it doesn't matter because stocks can continue higher and higher and higher, and those price to earning ratios, I mean, they mean something, but overall I really pay no attention to them, because you can see on this chart I don't see any price to earning ratios. I don't even see volume. It's not needed. All you need to know is where the price is, and with the indicators you can visualize where the price is. Right, briefly, junk bonds again correlate highly with stock market. Junk bonds is a high yield securities. Breakout also occurred around the time where S&P 500 broke out. You can see here's 4th of February, 5th of February, and here's junk bonds breaking out around the same time. So overall high correlation, in other words, they move in lockstep, and for now I don't see any major issues. I think these are 52-week highs here, so overall their junk bonds are doing just fine, and stocks I think will most likely continue higher from here on. Alright, so let's look at the treasury markets and a little bit again at the yield curve. So I actually I'm still holding the position open. I entered here in January of this year, took profits 3 times already, sold quarter. So I have a quarter of the position left, still holding it, still having my coupon or dividend coming in from a quarter of a position, but still, it could continue higher. Looking at the price action here, maybe it's done correcting. Maybe we'll see a move higher. What does it mean? TLT moves opposite to TYX, or 30-year Treasury note yield. So if TLT moves higher, TYX, the 30-year Treasury yield, will continue to move lower. This is not a good sign. Let me show you why. So again, this is a StockCharts.com. I'll show you where I got it from. If you click on charts and tools, you can click on dynamic yield curve right there, and there it is. So dynamic yield curve, once again briefly I'll show for the new subscribers and new listeners. It shows the current yield of the bond or note. So in this case we have 3 months, 2-year, 5-year, 7-year, etc. And here we have the yield. You can see that the yield on a 3 months note is higher than on 2-year, 5-year, 7-year, and I think even maybe a 10-year. That actually makes no sense because it's more risky to give loans for longer. So shouldn't the rate be higher? And in fact, it's not. It's the opposite. The short-term yield is actually higher. The yield curve should look something like that, where the short-term is, less than the long-term. But right this instant, we have this beginning of the what is called the yield curve inversion. So this is the yield curve, and it is inverting. In other words, the short-term yields are moving higher than the longer ones, and you can see that they're already up to 10 year. So what I'm saying is, you can see that I'm waiting for the, let me see, where is it, Federal Reserve to lower the yield, the short-term yield, so that this will be something like that. It may or may not happen, but in the past, as I have shown in the past, we had what's called a yield curve inversion event, as for example here in 2007, and then we had another yield curve inversion event back in 2000, and afterwards we saw drops in the market. Now, there was an argument also, I have a friend who go back and forth sometimes about the stock markets and the markets, and he was saying that since, central banks are printing so much money, do we need to worry about the yield curve inversion at all? Difficult to say. So we'll need to basically play it by the ear and see if we will see a repeat of this. Hopefully not. I mean, I would rather not see a repeat of this. And if the Federal Reserve waits any much longer, we could see that, because, as I keep showing, TYX, it could continue lower and break below, what it is currently for the, maybe what is it, 2.25 maybe, something like that here. If that happens, we could see a stock market drop. Hasn't happened yet, but it's possible. So overall, TLT could be already bottoming here around the green line, and maybe it'll just continue higher, in which case Federal Reserve needs to act pretty fast. Alright, let's shift gears. Let's look at Forex action. Here's DXY, dollar index. So if you listen to my videos, I keep saying that watch for a breakdown, watch for a breakdown. Breakdown never comes. The trading range is super narrow. You can see the trading range before was super wide where I'm hovering. Just back in March of this year, you can see right now the lines are very close together. So this is narrowing of a trading range. But dollar just keeps pushing. Go figure. Euro basically at new lows again, and notice here, this is actual chart for my subscribers as well. I wasn't really trading it because I kept thinking that we're gonna see a breakout, especially here in late June. I thought we were gonna continue higher, but no. Notice how it bottomed, rather topped exactly right around the red line, and then just collapsed afterwards. So if you traded it back here, you could have a nice gain. This is what, 255 pips already right there, if you shorted it here. I was not trading it, so if you shorted, congratulations. My position got stopped out just perfectly because, and I keep showing this to my subscribers as a lesson, because if you don't exit, you could sometimes end up with an enormous loss. So here is that trade that I keep showing as a lesson to my subscribers. I entered myself here on 3rd of May. I bought a GBP USD currency pair at 1.314, and it just immediately went against me. I got stopped out a few days later, because that was my stop. I was stopped at the red line. You can see the red line right there. For Forex, I used the red line. And then I just had no positions, and I'm just sitting and, looking at the markets. I'm not really worrying about being in the market. It's much better to be outside looking in than inside wishing you were out, which was exactly it. I was not wishing, I was just out. And notice what happened afterwards. That's another low on GBP USD. So if I waited and not exited, this would have been another 400 pip loss, right? So you don't want to do that. No, you want to exit. You want to be strong. You want to be psychologically prepared. You want to be ready for failure. In trading, there's lots of failure. We make money by cutting our losses and letting our wins run. If that made any sense, let me know. All right, moving on to gold. So dollar moving higher despite gold moving higher as well. So I wanted to show this chart, XAU USD, gold versus US dollar, and here on the bottom you can see, although I can actually make it GC1 exclamation point. Let's make it gold futures just for the convenience sake. So GC1 exclamation point is gold futures. This is a weekly chart going back to, let me see, 2004, but I can go back further. It makes no difference. It's similar patterns. On the bottom here, what I have what's called a correlation coefficient. So CC, correlation coefficient. You can get it. You can just enter it in the indicators. So correlation of dollar to gold is pretty obviously negative. Vast majority of the time it's negative. If gold goes up, dollar comes down. Vice versa. If dollar goes up, gold comes down. Right now it is slightly less negative. So you can see that correlation right now is 0.41. In other words, not always gold goes up and dollar comes down, but quite often. But overall, you can see that it is vastly negatively correlated. So right this instant, gold is moving higher. You can see gold at 52-week highs. We actually also opened a position in gold. Dollar, as I just showed, is also moving higher. So not in very normal behavior, so I'm now wondering which one would be correct. Is the dollar going to continue higher and gold will come under pressure, or the opposite will happen? Gold will come under pressure, gold will continue higher and dollar will come under pressure. So we will see. For now, this looks like a very strong bullish chart, and I would continue holding, continue buying. In fact, I actually have a position in GDX, so let me show it to you. This is just perfect. I mean, this is what the trader wishes he had all the time, he or she had all the time. We enter, the trade goes immediately in your favor, you take profits, the trade continues higher, you take more profits, trade just keeps going, and you just keep taking profits and advancing your stop. Does it happen all the time? I wish it did. But on this chart, what I wanted to show is a candle that is definitely a bullish candle, because it's a green candle right there on the 18th of July. It's definitely a green candle. It's definitely a positive looking candle, and I actually showed this to my subscribers. But it is at the top of a very large advance. So when you can see this large advance, and at the very top you see this huge bullish candle, this to me screams like a top-in pattern. You know, it's like exhaustion climax. I think it's called a buy-in climax. People just keep buying, and at the very top. So now you can see a pullback unfolding. Will this pullback continue? You know, nobody knows, but this definitely was a top-in candle. So even though it's a bullish candle, you can still think of it as a bearish candle. So you need to really read the context of the price action. Here's the same similar looking chart for GDXJ, the junior gold miners, and also alert was sent here. And notice this huge candle on the 18th of July, and I think it's a top-in looking candle because it's a very large bullish candle at the top of the range. So maybe we'll see a corrective action for a little while. But overall, right now, gold and gold miners are bullish. All right, let's move on to the cryptocurrencies, a new asset class that came into being recently. But overall, not unusual, not very different from what I've been doing with stocks. It's basically the same thing. There's the breakout on the 13th of May. Basically, I sent an alert right there, so you had 81% gain. If you were nimble and you were selling as it was continuous higher, I would be basically just taking profits. Eventually, I'll just close the position. Most likely, I would have closed the position right there on the 14th of July. You can see that Ethereum moved 80-some% up, and then it moved almost the same amount down. So if you were hoping for this 80-some% to turn into 160%, you're sorely disappointed. This is what I'm trying to tell you. This in trading and investing is not the same thing. So you need to basically be nimble and you need to take your profits. This is what I learned myself. Here's Litecoin. Alert was sent here, right there actually. It's not marked, but it was sent here on the 30th of April. It was just an enormous gain as well. This was basically 100% gain. And now it's kind of unraveling, so we need to be on the lookout. I think if it closes below 68.50, the red line here, then I would say that's it. It's the end of the bull market for Litecoin. But for now, it's still bullish, so we could see a continuation higher. But again, as with Ethereum, I wanted to show and highlight this, that you need to be somewhat nimble if you're trading versus investing. And I would not invest in Bitcoin or anything. I wouldn't invest in securities in general unless you have a very long time horizon before the retirement, etc. Okay, so if you have any questions, please head over to MasterChartsTrading.com, and if you're ready to sign up, of course, click on sign up right there, MasterChartsTrading.com. We have 3 levels of service. This will be updated pretty soon, and I'm kind of considering creating a VIP level where some of the services that are sent daily to the alert subscribers will be only available to the VIP. But for now, everybody who is currently a subscriber will continue receiving at least the level of service that they're receiving right now. So if you're a subscriber to the alerts, then you will continue receiving everything. If you just want to trade on your own, if you want the indicators, these indicators, the green, blue, red, and yellow lines on your chart, and I can explain it in 30 minutes, you can just sign up for that. It's at $29.95 per month or less if you do a yearly. Of course, if you sign up for the entire package, both the alerts and the indicators, you get a nice discount. Plus, if you sign up for a yearly, right now we have a sale going, so this will not last. This price is very low. So do consider signing up. Also, this will be updated pretty soon, and I will have more features and improved features. But for now, everybody is getting a very good level, very good service. I think I consistently under-promise and over-deliver, and I have a very high success, or rather satisfaction from the clients. Right, that's it for today's recap. Thanks for watching, and have another great trading week. Bye-bye.